Well, hello, everybody, and welcome to the Middle Class Investor. This is Seth Martin, your host. And it's Sunday, August 25th. And we're looking at S&P 500 here. You may not know kind of what we're looking at. I mean, we don't normally show this view. This is a non-log scale view of what we normally look at. As you can see, we had this big run up here into this. This is the 2000 top .com bust. This was most of this was like when George Bush was president, and then this last part was when George Bush was coming out and Barack Obama came in here. I'm just kind of giving you an idea of what the timeline is. Here's where Trump came in, and all this has been Trump since then. This is the previous fourth wave low on this chart right here. Well, this is a fourth wave low here. And the degree of this run up would, when we finally start the bear market, which will happen sometime after this move up, the pullback should be somewhere between this fourth wave low and this fourth wave low, somewhere in this area right in here. So that's kind of what we're looking at. If you look at a log scale, you can see it a little easier. Well, this is the 1929 crash. This is the run up into 1937. Wave 2 pullback into World War II. This is the 1970s bear market right here. And then basically we had the 80s. Here's the 87 crash here. And then here's our top in 2000 .com crash. George Bush kind of, I don't know what you call this. It's a wave B, but I don't know what you call that. George Bush's presidency, war on terror, maybe. Maybe that's what we call this, the war on terror. And then of course he finished. The war on terror was a bust. And anyway, I'm just trying to give you a couple different views of this chart that we've been looking at for a long time. And we've had some selling. So if this pattern holds true, and because it's not log, let me turn the log back on. If this pattern holds true, we should see market move down into this area in a wave E. Okay. What to say about that? Well, the thing about it is, when the market's topping, when it's beginning to roll over and change trend, this is to me the most telling time, because you have people saying, you got people very, very confident. Oh, this is going to continue. Buy the dip, and buy the dip works most of the time. But it's interesting to see how people's confidence is really, really high throughout this range here. And then when we break this low on pretty heavy volume and start coming down, you'll start to see those people drop off pretty dramatically. And this is one of the reasons I talk a little bit about Elliott Wave on here. Is Elliott Wave gives you, it's not a great trading tool. I mean, it's not, I can't for sure say Wavy is going to continue, just jump in and let's go all the way to the bottom, because it could open up. In fact, it did open. I think it's opening down today. Let's just look at the ES real quick. You can see it gapped down pretty good here and opened way down here and ran down, but then now it's rallying. So who knows? I mean, tomorrow when the market opens, we might open up somewhere inside this range, and we might get a little rally and then sell off. So, what we're leaving out, or what gets left out when I say, oh, we're going to just continue down into wave E. If you were to say short this market tomorrow morning, and we get a 50-point up day, and you're looking into your P&L and it's a $2,000 loss, you're not feeling very good about that. You're not feeling very good that this is going to continue down. In fact, you're wondering, wow, is that guy wrong? I mean, what if this rallies up and makes a new high? Which it could, okay? I'm not saying it's got to go down here. But the Elliott wave model does give us some backdrop from which to evaluate the market that we're looking at. Okay, so that's one of the reasons I talk about it on here. I'm going to show you some stuff in a minute that they wrote up in their Friday short-term report, which is they noticed all these little rare events, which is kind of interesting. But we had like 6 consecutive days of declining volume, which is, it turns out, is a very rare event. And I'm going to show you that in a second. And then we're going to talk a little bit about fractals, because I made the statement here before that the market is a fractal. The same thing happens over and over again, just at different degrees of trend. And this really confuses people in the marketplace and makes it hard to understand where you are in a trend, even with the Elliott wave kind of model as a backdrop. So anyway, you can see here we had a down week. We kind of rallied a little bit in the week, and then man, it just cratered toward the end, and it didn't quite get outside. If you're a candlestick person, it didn't quite consume, I guess is the best term to use. It didn't quite consume this whole block of price action. We're still inside that, so it looks like probably Monday or Tuesday we'll get outside this and break down through this formation here. But it was interesting that it didn't happen this week. Even as much selling as we had, it didn't happen this week. Now, the question that I'm wrestling with at the moment is I've got this support zone here, and what I'm wondering, for me personally, is the market going to come down here and pause in this area and rally? Because it's kind of already paused here. Let me explain what I'm thinking. So I'm not doing a very good job. Normally, these moves are an ABC move. Okay, so for example, you can clearly see here A, B, C, right? Here A, B, C. Here it's a little harder to see, but it's A, B, C, right? So this is even harder to see here. This move down, and then A, B, C, A, B, C, A, B, C. So we're expecting an A, B, C here, right? Well, so what the question I have in my mind is, did we already get it? I mean, is this it? Because this could very well be A, and then this all could be B, and we could be starting C. But if we're starting C, we shouldn't be stopping here. Because normally, if you were going to have like if you'd asked me, what is this going to look like before it even started to turn, and if you'd asked me that, I would say it would have looked like this: A, B, and then C down. But it looks like we've gotten this kind of, and I don't know if it's because of bull markets die hard kind of deal or what, but I'm just curious about what's going on here, because I don't know if it's gonna pause here and bounce. I just don't know. I don't have a good feeling for it. So it could, because this ABC could be, in other words, this could be ABC, and then we could get an ABC rally, which would be like a W, so like a an X wave and then Y. So it could still do it. It's just we're getting, this formation kind of happened early in this downtrend, and so it's a little confusing. I'm a little bit unsure about that. So I think the odds still favor some sort of pause here. So if you do get down here and you're short, you might want to consider taking some off the table. All right. Let's look at treasuries. Treasuries still falling. A lot of talk about the Fed lowering rates, and the Fed's likely to lower rates. I'll show you a chart a little later on the bond market to show you kind of where we are. Looking at yields, I've been looking at yields all this time, but there's a slight disconnect between yields and bond prices. So I think this is a little bit, I think this has been misleading to us, and so I think it's better to probably look at bond prices. I mean, it still doesn't mean this is going to make a lower, it doesn't mean it's going to take out this low. But I think it just charts better on the bond prices. So we'll look at that. You know, there's been a lot of talk by Trump in the media about how, you know, we're leading the world and all this kind of mess, and you know, I mean, I understand what he's saying. You know, Germany here is further, they've gone further down than we are. But this could be some sort of ABC too, and we're just going to catch up. Japan, same kind of thing, in decline. So there's a lot of rhetoric around that. It's kind of interesting to watch. I think Trump is watching the stock market too closely for a politician. I don't think that's productive for him. It's going to probably get him into a little bit of trouble. But you know, he's Trump and he does what he wants to do. So not much we can do about that. Here's volatility. You can see we expanded last week, as you might expect, with the market selling off, but we didn't come up here and make new highs. So the fear is not fully developed yet, and so we'll continue to watch that to see if we get up here and really spike up. I'm sure we'll spike up in wave E above this. So expect that to, well, probabilistically speaking, I mean, that's very likely that ultimately the volatility spikes above this old volatility high. All right. Let's switch over to the Thinkorswim charts, and let's look at, right now we're on the ES. So you can see the ES is still rallying. This is going to look like, this is interesting because this is a very bullish kind of a candle. Candlesticks tell you a little bit about what's happening from day to day. Whoops, that's weird. Let's see if we can start over. Get that locked in a little bit better. Okay, so in other words, if you get a candle, let's say the day after tomorrow, that looks like this, then this candle formation here is called a hammer. It's a hammer anyway, but where it wouldn't be a hammer. It wouldn't be a hammer if sorry about that. Gosh, I can't get this. It would not be a hammer if, you know, the next day's candle looked like that. Okay, but it is a hammer if the next day's candle looks like this. And this is very bullish, so this is a great entry. Usually you get some sort of run from here. It's pretty good. So keep an eye on that. But here's the S&P 500. You can see I've got that spot located here. The YM looks very similar, although I don't have it marked up as much. I don't have a spot, but you can see that we'll probably get some sort of pause down here below this pivot low. And then of course the NASDAQ, you know, it always sells off the most, but similar pattern. And so let's look at the euro. The euro is pulling back. Had a really big day Friday. This huge candle here. As you know, was trying to get into the euro all in here, and I finally did. I think I got in about right here, around 1.107. Of course, it pulled back even a little further and then rallied for me and made about $400 or $500, which is pretty good. So now I'm waiting for a little bit of a pullback because there was some resistance here. So I took some profits and wait until it pulls back a little bit. We should get some sort of ABC pullback, and then I'll get back in. There's no use in giving back I mean, let's say that I don't know. Let's say that this pullback, if I'd have stayed in, I give back $200. Why give back $200? Just go ahead and step to the sidelines. Let the market take the $200 hit and get back in. You just have to be very vigilant about getting back in. But the euro, I think that, the big picture on the euro, by the way, this is a 4-hour chart. So let me go to a weekly. You can see here I'm mapping out that this first move up was wave 1. I've been trying to get in here on wave 2, and wave 3 will be up here somewhere. So we got a pretty good move, pretty big expected move in the euro. I'm probably just gonna beat it up all along in here. Maybe even keep. What I might do is just get one lot position and hold it, and then trade another lot position. That way I can kind of make a little bit along the way, and then capture the whole move in my other account. So and if you choose to do that, you're more than welcome to do that as well and follow along. I will be talking about the euro each week since I'll be in it. All right, let's look at gold. Gold is getting very, very close to its completion of its move. It's above the zone now that we were talking about. So, we have to consider the possibility that we're wrong about gold. But before I get too crazy about being wrong about gold, I think this is clearly, clearly the trend in gold is up. So, this is such a long move that this has to be counter trend. So, because this has to be counter trend, wave B, given this previous formation, should be stopping somewhere around in here. So, it's just higher than we've anticipated. Same thing with silver, although we talked about silver probably catching up, and it looks like now it's trying to catch up. It's really been on a run here recently, and it could go ahead and run up a little higher. But both of these, just recognize if you're going long either one of these commodities that you're kind of in the chasing phase. This could go up here to 24, but I don't think gold's going to go that much higher. It's just hard to say. It's really hard to say. I think the bigger play into gold is probably gold and silver is probably down into this wave 4 support around here. Looking around buying gold around this $7.50 range. That's the bigger play. All right, here's the U.S. dollar, Japanese yen. And also looks like this is the initial move out. We got some sort of correction. Maybe the correction comes back into this area around 97.67 before you're long the U.S. dollar, Japanese yen. Pardon me. And then the GBP U.S. dollar. Again, we got Brexit going on here. This could be the first move. In fact, that's why I had this target on here, but then it ran up and rolled over and made a new low from this low. I don't know. I've been steering away from the GBP US dollar just because of the whole headline risk side of it. I think it's too easy to get whipped around in there with that. All right, here's oil. Oil was down quite a bit on Friday, 2+%. It's opened up lower today. It's already down 1.5%. You can see it gap down here. So oil's at least coming down into this area around 48, at least. And it could come all the way down here into this just 40 area or just below 40. All right. I want to show. Sorry about that. My wife stepped in. I just want to show this this information that I was talking about the 6 consecutive days. So the last time, they talk about the last time this happened was in, whoops. Why did that happen? Well, you can see here the last time it happened was in the 2007 top. So here's the 6 consecutive days. These days were actually up. They were up days, but the volume was contracting. And then the other time that this happened was the top. Oh wow, they're saying 1990. I thought they were saying 2000. So anyway, the other time this happened was they're saying that a 1990 top. So, but this time it immediately sold off. The time before it kind of ran up and then sold off. So I don't think there's too much we can read into that. There's not enough really data to suggest what normally happens when we get a situation like that. But I thought this was interesting too. We've talked about the market being a fractal, how it's the same picture at different degrees of trend. And I think what's interesting is this formation right here, this ABC formation, looks a lot like this one right here, this ABC formation. So I thought that was interesting, and they're really good. That's one of the things I like about their services. They're really good at pointing these things out. These things are very hard to recognize just as an average person trading, every day, or even, looking at your account once a month. I mean, it's just very hard to recognize these types of anomalies. So I thought it was really good that we're showing that. All right. Back to the charts. So we'll finish up with the profit chart of the S&P 500. We'll look at it. We'll look at all data, and we'll look at. You can see this is non-log. Okay, so it's not adjusting. In other words, the percentage moves are bigger and bigger, right? A 1% move here is 200 and something points. A 1% move down here is like 2 points. So if you want to get a better picture, you use a log scale. So again, this is kind of a 1, 2, 3. All this was 4, and we're just trying to wrap up 5. And so 5, we're gonna have a down into 4, and then a rally up into 5. Now, having said that, it is possible. So let's talk about what is possible. It is possible that either this, that this is the top, and we get just a crash from here. That's possible. So there should be some places along the way where we can look at some of the market internals and determine whether that's a high probability or low probability event, especially as we start moving closer to this wave E low. So just keep that in mind. I still think this pattern looks really good, and I think it's likely that we come down here, so and then make a new high. In fact, what could happen is, there's just a lot of negative in Trump's administration right now. People are trying to talk up this recession and blah blah blah, and so I mean they could end up talking it right down into this wavy low, and then something happens, we get some good economic data or something, and then the trend changes, and into the election, Trump is rallying all the way into the election. And then you could have another just freak out session after the election where the market sells off after making new highs. So, I mean, who knows? That's all speculation. This is all speculation, actually. But anyway, that's about it. That's all I've got for this week. I had a little trouble uploading the video last week. I don't know what happened. I don't know. YouTube has changed something. There's something about the way the account works. It's different. Hopefully I won't have any trouble doing that this week, but just bear with me if I do, and I'll get it up there as soon as I can, okay? All right, everybody, thanks for coming in, and we'll see you next week. Take care. Bye-bye.